Hey everyone, it's Matt Donahue with Mission Financial Planners, and this is your weekly market update. It is coming to you live on Monday, August 5th. The markets have been all over the place for the last couple of days. We saw a big sell off today. A lot of people are wondering what drove that big sell off. I can tell you it has a lot to do with the weak labor market data and uneven earnings that came in last week. S&P at 500 and NASDAQ were down for the third week in a row last week. They're down again today. S&P is off by 5.7% from its record high that was back on July 16th. NASDAQ is in correction territory. As of Friday's close, it was down 10% from its July 10th record, and it's down about another 4% today. The Part of the reason for this, the mixed results, big tech companies were uneven. They were all over the board. As of Friday, analysts were expecting S&P 500 companies overall to post an 11.5% second quarter earnings increase compared with the same quarter year earlier. Entering earnings season, the projected growth rate was actually coming in at about 8.9%. Stocks fell sharply Friday afternoon after U.S. jobs growth slowed for the third month in a row, and the unemployment rate rose to its highest level in nearly 3 years. There were 114,000 new jobs, but that came in below expectations and was far short of the 12-month average of 215,000. Unemployment rose to 4.3%. Despite the negative momentum shift at mid-month, S&P finished July with a 1.1% gain, which means it's been positive for 8 out of the last 9 months. The Dow outperformed with a 4.4% gain, while the NASDAQ was down about 0.8%. The Fed Reserve again held off on cutting interest rates in their meeting last week, but stocks climbed after Jerome Powell said that an initial reduction could be on the table for its next meeting in mid-September if inflation continues to ease. There are concerns, of course, about the labor market weakening in addition to those inflation risks. Gold futures pushed their record levels higher, and the commodity briefly topped the $2,500 an ounce level on Friday for the first time ever. As of Friday, the price was up 4% for the week. The year to date, the price was up around 20%. Yields are sliding. That shifting interest rate outlook and fresh economic data fueled a price rally for government bonds, which sent the yield of the 10-year Treasury to around 3.8% on Friday, which is its lowest level in about 8 months. Yields of the 2 and the 30-year notes also fell sharply for the week to levels that haven't been seen since late last year. Policy divergence. Hey, while the U.S. Federal Reserve kept its key interest rate unchanged on Wednesday, 2 other central banks shifted their policies, with one cutting rates and the other raising them. Bank of England cut its key rate for the first time in 4 years, while the Bank of Japan raised its benchmark rate, citing concerns about weaknesses in Japan's currency. Reports coming out this week. So today we have the Institute for Supply Management's non-manufacturing index. Tomorrow is the trade balance, consumer credit on Wednesday, wholesale inventories on Thursday, along with weekly unemployment claims, and no major reports are scheduled for Friday. Okay, this week's philosophy quote is pretty timely, especially given the volatility we're seeing in the market, and it is: the good life is anywhere. At this moment, you aren't on a journey, but wandering about, being driven from place to place, even though what you seek to live well is found in all places. Is there any place more full of confusion than the Forum? Yet even there, you can live life at peace if needed. Seneca, Moral Letters. Great advice, especially for periods like now where the markets are going all over the place. Could you worry about it? You could. Could you maybe do something a little rash, right? You could, right? You've got to stay disciplined, and you've got to be able to just center yourself and say, you know what? Yep, things are going to go up, things are going to go down. Either way, I'm going to be all right. So I'm not going to let myself get bullied by the news into doing something that really isn't in my long-term best interest. Tax tips, we're going to talk about higher education. Hey, school starts next week, so there's some school tax benefits that are out there. So tuition expenses, there's tuition expense credits that are available for up to $4,000. The parents can take this deduction if they're paying for education expenses for themselves, their kids, or other dependents. The key is they got to be able to claim that dependent on their tax return. Only claim what you pay for. Use the Form 1098-T, which will get generated by the institution. Just keep in mind that 1098 goes to the student. It doesn't go to you if you're the parent or guardian. So just make sure that that student is keeping an eye out for that every year so you can use that and take advantage of it. The American Opportunity Credit is worth up to $2,500 per eligible student and is available for the first 4 years at an eligible college or vocational school. It gets subtracted from your taxes, but could also give you a refund of up to $1,000 if it's more than your taxes. Really, the biggest thing is you got to be going for a degree or other recognized credential. Lifetime learning credit is worth up to $2,000 per tax return per year, regardless of how many students qualify. This is for all years of higher education, including classes for learning or improving job skills. It's limited to the amount you actually paid, though. Okay, so if you paid less than $2,000, you're not going to get $2,000. Important points for each credit. So don't forget the school issues that 1098, which is the tuition statement. The way you file is you use Form 8863, which is education credits. That's how you claim it. If someone's claiming you as a dependent, you cannot claim those credits. You also cannot claim the credits for the same student or for the same expense in the same year. So in other words, you can't double or triple dip with that. They are subject to income limits. Double check with your tax professional to make sure you understand that. And employers can deduct up to $5,250 as a post-secondary education degree program per employee through the business without the employee paying taxes on the money. So this saves taxes for the employee and the employer. So you might want to think about, if you run a business, hire your family and certain college expenses could be a deduction in the business if the class is necessary for the employee's job. They can also deduct college education classes paid for employees. The employer's company may pay for the college classes for employees if there's no discrimination. So again, if you're going to do this for your kids, you got to do it for everybody, right? You can't just do it for your kids. And it's got to be there for helping to improve the job skills of that employee. So interesting stuff about education and taxes. Last couple things, health tip of the week. So last month we were talking about eye health care. This week we're going to talk about sun safety, or this month we're going to talk about sun safety. So interesting article again from our friends over at the Mayo Clinic. Just keep in mind when you're running around outside, choose the right sunscreen. Wear sunglasses, wear a hat. Now, sunscreen. So, for example, I try to take my kids to the pool a lot. I was a lifeguard growing up. I try to help them learn how to swim. And what I do when I go to the pool is I put a lot of sunscreen on my head. I put it on my hands, right? I put it on my legs, but I wear a long sleeve swimming shirt that's form fitting. Now, I'm 51. Nobody really needs to see me without some kind of shirt on at this point in my life. But that shirt has an SPF rating of 50. That's what you need from all your sunscreen, all that kind of stuff, is an SPF rating of at least 50. A couple years ago, we were visiting my wife's family and we were out and about all day. And I had an SPF 50 long sleeve shirt with a little hood. I had a hat. I had my sunglasses on. I literally did not need to put on sunscreen that day because I had the hood, the hat, and the glasses. Now, that didn't stop some people from making fun of me for looking like an old man, but you take my point, right? Protect yourself. Take a couple basic steps, right? If you're going to be out in the sun a lot, you don't want to, an ounce of prevention is worth a pound of cure. I'm a strong believer in that. But check out that weekly update. Hey, and again, remember, markets go up, markets go down. So we know markets went down quite a bit today. Just hold the course, right? Hold the course. That's the best thing you can do when markets go down. So if you have any questions, feel free to reach out. 888-339-0063. Once again, 888-339-0093. Once again, 888-339-0093, or feel free to email us at admin@mfplanners.com. Thanks again, everyone. Have a great rest of your week, and we'll see you next week. Bye-bye.